New mortgage rules have kicked in today. They're part of the 2024 federal budget. The rules give first-time home buyers the chance to get a 30-year insured mortgage. Excuse me, that is 5 extra years. To qualify, you need to buy a newly built home. You also need a high ratio mortgage. That means having loans that exceed 80% of the purchase price. Plus, the home has to cost less than $1 million with a down payment that's under 20%. For more on this, we're joined by Murtaza Haider. He's a real estate management professor at Toronto Metropolitan University. He joins us from Mississauga, Ontario. Murtaza, there's so much to get out there. I was tripping over myself in terms of the qualifications here. It only applies to a small group of people, of these first-time home buyers who would be in the right scenario to qualify for this 30-year amortization. How significant is this change?
It's a change. It will be helpful to some. The first-time home buyers are usually 45 to 50% of all home buyers, the largest group of buyers in Canada for resale properties, at least. For the newly built, the numbers is still very large. So it will impact a small number, even though the cohort is largest, because this may help people in the Maritimes where housing prices are low. It may help people in the prairies where the prices are low. But in places like Vancouver and places like Toronto where home prices are very high, the average house price is already over $1 million, and we're talking about newly built, and those prices are slightly different. So it's very difficult to find something under $1 million. Rather be a condominium in both the larger cities of Toronto and Vancouver. And so therefore, we believe that it will impact a smaller number of people who will be able to take advantage of it. And at the same time, we also know that the mortgage rates are still very high. And despite the fact that the 30-year mortgage would have a smaller monthly payment compared to a 25-year mortgage, still the higher mortgage rates mean that people would still have to dig a lot deeper into their pockets to get that kind of mortgage payment. So we believe that it will have a positive impact. Those who could benefit from it will definitely be grateful, but we expect a smaller cohort to be benefiting from it.
Yeah, with the rise in house prices over the course of the pandemic in particular, Murtaza, just how out of whack is housing affordability still at this point for Canadians?
Well, the housing affordability actually became even worse, despite the fact that prices were declining since March of 2022. And the reason is that people feel the pinch, not because as much as prices, but at what goes out of their pocket every month in mortgage payments. And when the mortgage rates or interest rates increased, so did the mortgage rates. And when the mortgage rates were in excess of 5%, that's where the real pinch was felt, and people were spending 50, 60 or higher percentage of their household income on shelters just to be able to maintain their mortgages. So yes, affordability is still out of the reach for most, and those who are able to pay their mortgages at the higher mortgage rates are cutting expenses in other places just to be able to have the shelter that they can afford.
Murtaza, you focused in at the beginning there on how this applies to new builds, these new rules. You can get this 30-year amortization. You can stretch out your loan if you're buying a newly built home. The strategy behind that, what do you make of it? I mean, obviously, the government wants more homes to be built. Is this, one of the tools in order to make that happen?
Exactly. So, for instance, a person who has an option to buy a resale or a newly built property, because of the 30-year mortgage, they'll gravitate towards the newly built. And what we are trying to do, what the governments are trying to do in Canada, is to encourage the construction of new homes. And obviously, this is an incentive for consumers to buy new homes. Remember that we have to build 3 million or more homes in the next 8 to 9 years. And CMHC's estimated about 5 million plus homes that need to be built to restore affordability. So building one homes is one thing, buying them is another, and this is the part where the government comes in and says we will make it more attractive for you to buy a newer build so that developers and builders have an incentive to continue building more homes.
And that level of building isn't looking particularly good right now, Murtaza, with the cost of construction and with interest rates still elevated. That's impacting developers as well.
Oh, yes, the math is still not favoring the builders to go out and build at a very large number. We are struggling to maintain even lower levels of construction. The housing starts have been low. where we should be building about 300,000 plus homes per year. In Canada, we are about 250 or lower on an annualized rate, and is a struggle, despite the fact that the government is making an effort. But I think what we have is we have got ourselves into this regulatory chokehold where there's so many regulations, so many charges, so many taxes that once you go through it, it takes the incentive away from builders and developers to build, because what they build is unaffordable for many.
Well, we'll see how the supply situation shakes out over the next little while, Murtaza, and how that impacts the affordability equation too. I really appreciate your perspective today. Thanks so much for your time.
Thank you for having me.
That was Murtaza Haider. He's a real estate management professor at Toronto Metropolitan University.